how do you think it'll play out?
I think what you're seeing is that the Fed has to provide liquidity to make sure that the markets function efficiently and effectively. They've done this in the past, and I think you'll see them continue to be interactive with the markets to make sure that they don't freeze up.
Because it's the banks who are among those that use this overnight, these repurchase operations. Is that right?
Well, they're part of the process. The money market mutual funds are very big in it as well. So it's the entire financial system that are interrelated, and they have to make sure that liquidity doesn't dry up.
And why would they need to go to the Fed for this liquidity? The fact that they are offering it and that's where these participants go, where would they typically get it?
Well, typically when markets are this volatile, the Federal Reserve will always come in, and that's what they were created for, the lender of last resort. So I think the Fed is doing what it's supposed to do, and if they could calm down the markets, that obviously will help everybody.
One point that Peter made a little while ago is that you go back to the financial crisis sort of hallmark legislation, the Volcker Rule, which was meant to make sure that banks weren't trading with client money, so to speak. But the effect of that meant that banks weren't doing a lot of trading, period, that they had traditionally done, for example, in the bond market. All of the stuff that we've seen happening in the Treasury market this week, is that telling us that perhaps the cure was worse than the disease, or how would you kind of interpret that?
It's a little too early to tell. We'll do the post-op, hopefully in 3 or 4 weeks from now. But I would say this, the Federal Reserve knows that if it needs to do anything, it will do it. Meaning, during the crisis, it broke the rules. It did things that nobody expected it to do. And I would say that if they think they need the Volcker Rule suspended, they'll suspend it. So what I would say is they will pull out the big guns to make sure that this does not lead to some sort of collapse like we had in 08, 09.
Right, although, Peter, those desks don't exist anymore to some extent.
Right.
They're gone.
They're not going to get revitalized.
Those participants are gone.
Right, but this is the side effect.
How do you expect, so the banking industry obviously at the heart of, if we look at the headlines the last couple of days, it's companies like United Airlines and the cruise lines tapping their credit lines. Is that why what you think the Fed's ultimately trying to do here is, yes, help trading market liquidity, but also make sure that liquidity in the kind of system in general, we should say, is available? In other words, how would this go from helping the banks per se to helping oil and gas, travel industry and so forth, or will it?
Well, it's certainly not going to help the fundamentals. I think it tries to help confidence in that people want to believe that the system is not going to all of a sudden, collapse under its own weight. I think in terms of the companies that are tapping these credit lines, it'll be specifically those companies that may have maturities coming up this year or next, those that have immediate working capital needs. But there's still a lot of other cash-rich companies that are not going to. I mean, I'm hearing so far that while the headlines are the Boeing and some others that are tapping, most companies are not. So we'll have to see how this plays out. But that's what banks are there for. They're well capitalized and they're prepared for things like this.
I think you said it perfectly. The banks are very well capitalized, and we're seeing a re-intermediation back into the banks. So the banks have lost out to the shadow banking industry for 30 years. So now they have the capital, they have the liquidity, and these lines are set up for this very reason. So sure enough, these companies have this access, which is very good.
Although the market's not getting them much of a vote of confidence.
Correct.
Correct. Why, for example, is a name like Bank of America one of the worst performers? We're used to in the past seeing Citigroup often the kind of the one that's really taken to the woodshed. Is that because Bank of America represents the broad consumer economy to have exposure to some of the weaker parts of the U.S.?
I think it's more just memory from what happened in 08, 09. And unfortunately, Bank of America was one of the troubled banks along with Citigroup. So I think what's going to happen is the banks can demonstrate, which we think they will, that they will get through this correction or this downturn very efficiently and maybe even profitably, that they will rebound and people will reassess that the banks do have the strength and the liquidity, and we shouldn't treat them like we did in 08, 09.
Yeah, and so if we take a step back, then there's the kind of immediate overnight or term liquidity, let's say, from the Fed. There's also this $60 billion of purchases. And, Peter, this takes us back to the crisis-era playbook, and it's actually coming before they have even cut rates all the way to zero. What is in the toolkit now? What does this reveal about how the Fed might be thinking about how to treat this continued market sell-off?
Well, with respect to their meeting next week, I think what we're seeing is it's not the cost of money that is the issue here. It's the flow of liquidity in different pockets to those that need it from those that can provide it. And shifting the cost of money from 1% of the Fed funds or 50 basis points or 75, that doesn't really matter. I think the Fed needs to shift to getting the money to those that need it, lubricate the liquidity in terms of the bid and the offer of these markets, and try to make sure that we can get to, let's just call it May or June, when this virus hopefully calms down. It's all about buying time right now.
Yeah.
It's buying time. and to calm people down, to get us to springtime where we hope that this starts to calm down overall with respect to the virus.